Hey, it's Phil here again with jordanapartmentguys, and we've got a subject that's been a super important subject lately and getting a lot of questions from property owners, and it's all about interest rates. So as we all know, interest rates have jumped up. The Fed is making changes, and now rates are considerably higher. We looked at where interest rates have been for multifamily properties, non-owner occupied, ranging in the 3.5% to 4%, just really only 3 or 4 or 5 months ago. And now they've jumped up to 5.5% to 6% interest rate. So that's quite a jump. It's been about a 2% interest rate jump. So the talk today is, how is that going to affect your property value? So the main thing you got to think about is look at it from the buyer's perspective. If they're looking at a 3 3/4% interest rate, their payment is going to be about $2,800 a month. This is on a $500,000 investment property. You're putting 25% down. Your 75% loan to value at 3 3/4 interest rate is going to be about $2,800 a month PITI. On a current interest rate scenario for today's market, we're running about 5 3/4. That's about a $3,360 PI, principal interest. That's a difference of about $560 a month. So where buyers are forced to, because of the tightness of the market and strong demand, they've been pushing up the prices they've had to pay for price to be able to compete with other buyers. Now, if you throw this in their lap, it's definitely going to affect the demand price for your property. So, $560 a month difference. So if the buyer wanted to maintain his same profit with this building as he would have like 3 months ago at the lower interest rate, you could equate that he would want to, if you compound or if you multiply $560 a month times 12, so that's about $6,700 a year higher expense to own this property. And if he's expecting a 5% return on his money, well, that equates to it's about $135,000. $135,000 is what that equates to. So is this rate differential really causing prices to drop $135,000 on a $500,000 property? Well, the answer is no. It is not. And we're at a kind of a point where things are starting to shift in the market, but basically inventory, why is it not going to drop the price of the property? Main thing is demand. Demand is still hot. Inventory is still relatively tight. I mean, here in Bakersfield, we have about 35 multifamily properties for sale at a given time. 2 months ago, now we have about 48. So that number is going up, but it's still very low. We're probably about 80 apartment properties for sale, just 1 and 2 years ago. What else? Sentiment. Sentiment is still very high for real estate compared to other investments. If you had money in the stock market 6 months ago, well, now you maybe have half of what you invested. Real estate is much more stable. So sentiment is still very strong about real estate. Also cash buyers. There's cash buyers in the market. There's buyers with large down payments, and so they're less affected by interest rates. And the third category is 1031 buyers. So these are people that interest rates are not going to affect, so they're looking at things with somewhat different metrics. We're still in a phase of 1031s. There's been a lot of buyers getting into the sale of their property, their sale property. Now they're moving into finding the replacement property in a 1031 situation. So we've still got a lot of that activity. They're kind of constrained by a timeline. They've got 45 days to identify the replacement property and close, within a 6-month period. But they have to identify within 45 days. So they're very conscious of captivating a property as a replacement property in that 45-day period. And with a tight inventory situation, their choices are much more limited. So what's important for a seller or an owner right now is to think, if I'm thinking of selling, is this a good time? Well, the interest rates have gone up, now what? Well, I would say timing is really good right now because inventory is still super low. So you've got all these factors that are still holding prices in place. But we don't know what's going to happen. 3 to 6 months from now, we could get flooded with more inventory, which is going to create more competition for sellers, more competition for buyers for sellers. And although it's also possible with the election coming up, there's a strong possibility that the Fed drops the rates because of political reasons. So who knows where we're going to go from here. But it's definitely some important things to think about.